Alright, what's up guys? It is Friday. I got a Coors Light sweatshirt on, and we're going to jump into a quick recap here. And then as always, I will hit y'all on Wednesday, or on Sunday rather, with the weekly watch list video. But I do think a quick weekly recap is in order here. So obviously, pretty crazy week. Now ironically, we basically finished today where we started off on Monday. So it's not like we went anywhere all said and done. But you did have, of course, that huge rip post-Fed, and then the following day you get the flush that basically wipes out that entire move. So in hindsight here, I've been sharing with you guys that game plan of let's wait for a bounce into the 21 EMA, let's short the crap out of it, then catch the next flush to the downside. So in hindsight, obviously, wish I shorted on Wednesday before the close. I didn't. Quite frankly, I thought there might be a little bit more gas in the tank to squeeze the shorts. But the market had other things in mind. So pretty much here, guys, I'm in the same camp of waiting for bounces to put on shorts, for June, July expiration. And one thing I did want to cover really quick, and again, we'll go into all this in detail on Sunday. If any part of you is thinking right now, there's no way the market can trade lower, I would show you this weekly squeeze here on the S&P 500. And there's a weekly squeeze on Tesla, a weekly squeeze on Amazon. In this moment in time, they think the S&Ps can't trade lower. It's basically like thinking back here, when we're in this bullish weekly squeeze, that we can't trade any higher. You all know the rule. Squeeze fires, it could give you 5 to 8 bars of momentum. So if a weekly squeeze fires short, 5, 6, maybe 7, maybe 8 bars of momentum to the downside. So yeah, this could certainly trade much lower. Certainly could trade much lower. But I think the last thing you want to do here is jump in and, load the boat on a spot, load the boat on shorts at a spot that I do think could be a little bit tough, guys. So, one thing I'm seeing on Twitter, a few of you hit me up on Instagram, asking, do I think we're going to get a margin call Monday? And keep in mind, it's possible. The Fed has told us what they want to see happen. They want to see stock prices fall. We were on Twitter Spaces earlier. It was me, TG, Allison, and Chandler. And we were talking about this, and basically, I think it was TG that said it, the Fed wants people to feel more poor. Right? So you got $100,000 in your retirement account, market gets cut in half, you're going to feel a little bit more poor. That's going to control how you're spending and things of that nature. So the Fed has literally told us what their plan is and what they would like to see happen. So combine that with a whopping weekly squeeze, yeah, you could see more downside. But in terms of a margin call Monday, while it is possible that we gap down and trade much lower, one thing to keep in mind, a few things to keep in mind. One, we can go through a chart and we can find a few examples of times throughout the past where getting short at minus 2 ATR was a good decision. And we can find a few examples of that. We can find a shitload more examples of, times where getting short at minus 2 ATR leaves you with your teeth kicked in on the short squeeze. So we're down here at minus 2 ATR, and that goes for like everything, Tesla, the Qs, etc. So we're at an extension. We're also at what I think is, call it a crowded level. And again, I think at some point support is going to break here. But you've got to keep in mind, every retail trader, everyone and their mama, is probably looking to short the market on the break under this February low, in the recent low. Like, everyone's looking for that short. When everyone's looking for the same move, it just might not be that easy. So you're at minus 2 ATR. We're at what I think is a pretty obvious level where a lot of folks are probably leaning short. And that idea that folks might be leaning short kind of gets confirmed by the put-call ratio. So, for those of you that are unfamiliar with the P-call, can I get a quick P-call? But for those of you unfamiliar with the put-call ratio, in plain English, right, keep it simple. When the put-call ratio is up here around 1, everyone is starting to get short. All right, so you get the market really positioned on one side of the fence. That's taking place when you're at an extension where the probability suggests there's a pretty good chance they're going to get a bounce, and it's all happening at key support. So I have to look at this as a market that could go both ways for the reasons I just listed. This is key support. We're in an interesting environment. There's this bearish weekly squeezes. I think at some point this is going to break. But the idea of getting short for that breakdown right here, I think it'd be a little bit tough. So again, in hindsight, would have loved to have shorted everything, short the world on Wednesday, because then you catch the flush to -2 and you're in a good spot. You can take profits if you want. Nothing wrong with that. Or if anything, you got some cushion here to sit through a little bounce, then catch the next flush. So, few different things, guys, to keep in mind. Just trying to offer you a few different perspectives. For me personally, one of my biggest rules is don't get long or short at 2/8 AR. So by default, I am kind of waiting on a bounce here. But I hope y'all had a good week. Hope you survived. I hope you thrived. And I'll show you a few things here. So in terms of group trades, kind of kept that quiet this week. Which every now and then is not the worst idea. So let's see, in the options room, we did a put credit spread here on Tesla. Obviously, we got rid of that with good timing, because that got freaking hammered. But we sold that spread at about 380. We bought it back at about $1.50. And then in the mastery, we did the unbalanced put fly, which I covered in Monday or Tuesday morning's video. We bought that fly at 210, and we sold it at 0.25. So 2 nice winning trades there. And then kind of on my own, Iron Condor on the S&Ps, Iron Condor on Amazon, a couple other butterflies. Did have a short earlier in the week on the VIXY. Just kind of doing a lot of shucking and jiving, guys. So this is from my smaller account. But in terms of open and closed trades for this week, no losers there. So looking for more of that next week. For those of you in the options room, for those of you in the mastery, as we discussed earlier, number one short on our radar outside of the S&Ps is going to be Apple. So we'll kind of save the deep dive here for Sunday's video. But Apple has held up a lot better than your Amazons, your Netflixes, your Googles, your Jugles, and your Amazons. So I think at some point here, Amazon kind of plays some, or Apple rather, kind of plays some catch up to the downside. So my thinking is, as long as we're under the weekly 21 EMA, in a weekly squeeze of the bearish histogram, with no stacked DMAs, and sell signals on the daily chart, I'm looking to short the pops here. So the trade that I'm trying to work, give you guys a quick peek here. And you did see Apple bounce a little bit today. I mean, not a little bit, you had a nice bounce. We had an order working for an entry, didn't quite get the fill. But what I'm looking for is the June 17th. 165, 145 put debit spread, and I'd like to buy that for about $6.50. $8 is a little bit steep. In terms of risk versus reward, and what I mean by that is, if we analyze this trade, so we pick that up for, let me see. Hold on here, guys. Let me move myself up there. Here we go. If we can get that spread at 650 with a profit target of a flush down into about 145 and an exit on a close above the weekly 21, so call it 165. If we could grab that spread for 650, if you look at the risk versus reward into, say, May 20th, up at 165, we're down about a little bit less than $200 per contract, where a move down to 145 would net you about $700 per contract. Down at 140, you make about $900+ per contract. So if you can get that spread for 650, good risk reward there. So that's one trade we're looking to work next week. But like I said, we'll do the deep dive on Sunday. So I'm gonna get some dinner here, take the dog for a walk, and then get back to work. Jump into the scans and get the watch list ready. So I'll bring you a few names off the watch list on Sunday. But before I cut you guys loose, definitely take advantage of this here. We just opened up the free room over at Simpler. So if you don't happen to be a member of the options room, if you're not a member of My Mastery, and you want to trade live together, come join the free room. So show you guys this here real quick before I cut you loose. But I'll put the link in the description, or you can head to simplertrading.com. But yeah, we got the free room open. So I am in there, I think 4 times per week. But we've also got, Sam Shames is in there, Danielle Shea, the GOAT John Carter. We got Henry Gamble in there. So if you guys enjoy these videos and you like, my strategy, like Chandler's strategy, sign up for the free room. No strings attached, and I'll be in there live on Monday morning. So hope to see you guys there. Otherwise, enjoy your weekend. Talk to you guys on Sunday, and shall not be dull is my best guess. Talk to y'all soon.